Hey all, welcome to ShareTreck. This is Raj here, friends. I want to do a midday video today. I was looking at NASDAQ, the way it's moving, and also saw the tech shares going up and genomic shares coming down, including the ones that we are closely watching, that is CRISPR Therapeutics and Bluebird. Thought it was time to do this video. So let's get started. Well, let's start with the CNN Money Fear and Greed Index. So the Fear and Greed Index is firmly in greed, but if you look at the timeline section, right? So we are tracking this route. Basically, it's in a bullish angle, which means greed is increasing. But off late, you have seen a little bit of a dip like we saw earlier. So I think that it's just a matter of time before we start coming down on this one. And that would translate to us going into neutral and then moving into fear and extreme fear. So everything on the right side of neutral is good for share prices to go up. Everything on the left side out here is going to be bearish. So that's the way I'm looking at this chart. Next, I want to show you today's markets the way they are. I'm going to just bump this out here, and you can see that the Nasdaq is doing very well today as compared to previous days, closely followed by S&P 500, and then the Russell index is at the very bottom. So Russell has not performed very well for quite a few months, but Nasdaq is still maintaining the top dog status. It's just battling with S&P 500 to stay on the top. So that said, I want to go and have a look at our TradingView platform and check out what is happening out here. Let's start off with the futures. So if I look at Nasdaq futures, they are mildly positive, 0.19%. I would consider as a mild positive. And even though we had a bullish Bennett, we broke down on the lower side. And even though today's candle is green, it's not that much of an improvement over the drop we had yesterday. MACD is still bearish and momentum is still above average but a bit flat. It's not going up. It's moderately improving, but it's not looking like it's in a hurry to go anywhere. So overall, I think that we are still in the track on the way down. This is the in-between blip that we are seeing, where a little bit of profit taking and sectoral rotation might be coming into play. And let us go into the next one, which is the indicators, and look at QQQ. And in case of QQQ, you can clearly see that we went up, we pushed along this huge zone of resistance, and then we came back. It was a very tame retreat. We didn't try too much, and we are on our way back again. MACD is bearish. Momentum is also momentum is above average, but it's a bit flat. So I'm still of the opinion that we are going to test our support at 374.86, and in the process we are going to fill up this gap up that we created. I think that's what the index is trying to do, and once that is over, then we'll reevaluate based on whatever indications that we get. And if I was to look at the VIX, VIX is definitely consolidating on its way to move up. That's my feeling. And if you look at the MACD, it has become bullish, and momentum is yet to recover. The momentum is the factor that is keeping it low. But once the momentum picks up, I think we're going to see VIX move up, which means that the share prices are going down. S&P 500 is consolidating, and it's consolidating on a upward bull channel. But the only reservation I have is this huge gap up out here. So this is what is the negative factor for me. And then if you look at Dow Industrial Average, again, it has a gap up which needs to be filled up. It's consolidating. It's preparing to challenge 365.11. I'm just going to quickly turn these resistances into support because we have covered good deal of ground, and a lot of people are in a positive and they may want to take out the money. You can see that the RSI is overextended. MACD is bullish but moving towards the signal line. How do I know that? Because you see this lighter shade out here of green. That indicates that we are moving closer to the signal line. There is a requirement of a little bit of cooling of Dow Jones. And if you look at the US dollar index, it is going up. So money moves into dollar and out of stocks. And if you were to look at the natural gas, it is still at a low level. And if you look at oil, it's continuing to drop. It is 1, 2, 3, 4 continuous days of drop. So I'm looking for a turnaround, because if you look at historical situations out here, I think 4 days is the max that you can expect for continuous drops, and these are healthy drops. So it has to turn around. MACD is still bearish and momentum is also below average. So I don't know how it's going to manage that feat unless there is an announcement of some production cuts or something. So that's what I have there. And let us look at the put call ratio. Put call ratio is still bullish because it's below 1. It's 0.881 right now. So put call ratio indicates that probably we have got a little more steam left in the market. If you look at companies which have uh, the stocks in S&P 500, which are about 20-day average, I think the number is still a bit stagnant out here. It's very close to its all-time high resistance out here, which is around 92%. So I think if you look at the MACD and the momentum, you can understand that it's trying to come down, and when it starts coming down, that would indicate that overall stock prices are going to go down, and that's the way I interpret that. And oil, Nasdaq US Smart Oil and Gas Index has fallen below the line of support. So oil is growing weaker. My thesis initially was that one should move into oil because it's beaten down, and it'll start giving returns as technology starts going down. That was my thought, but I don't see it happening the way that I visualize, because you can see that the MACD is also ready to cross over the signal line and go bearish. Momentum is also weak. The further downside is to be expected, which makes me conclude that probably the positive that we are seeing in QQQ is not a one-off. Maybe we are going to test this area of resistance once again before coming down. That is quite possible. So having said that, I want to go into the technology watch list and look at some of the big bellwethers that we follow. Apple has been doing extremely well today with a gain of 1.97. And then we have FNGU, which has got Apple in it, which has also done very well with a gain of 1.87%. And Amazon has gained 1.5, Google has gained 1.30, and Microsoft has gained 0.87, while IBM has gained 0.42. So these are all positive gainers. Even Netflix has done very well with 0.32% gain. It has arrested its fall, and it has got a gap down which needs to be filled up. So it's not doing too bad. And despite all the hype, CRM is again starting to fall down. I have shares of CRM. I'm still at a loss even after all these gains that the share made, keeping it for long term to see what happens. So that's about what I would say out here. Next, I want to go into genomics. So in genomics, Sarepta is doing well, Gilead is doing well, and Vertex is doing well, as well as Editas. The others are all in the red. And I want to talk to you first about Editas. So Editas has got a bullish pennant that is forming out here. It's a bullish pennant because it's on a bullish trend, and it has got very little room left before it has to break out. And bullish pennants usually break out on the upside. The only thing I believe that is holding it back is the overheated RSI. So that needs to cool out, and maybe in the next 2 days it can cool off, and then by Friday it can come up when CRISPR gets the approval for Exaccell. I think it's going to lift all the boats, and at that time Editas can break out again. So that's what I'm thinking. Next, I would like to go and take you to Caribou Biosciences. And when we look at the chart for Caribou Biosciences, I think that the markets are looking at the IP situation, the CRISPR IP situation, and the stock price is back into the long-term bear channel, which we were in, this long-term channel that I had spoken about earlier when I said that we broke out of this. It's a very long-term bear channel in which we were traveling, and we have broken out of it, and then we have come back into it. But there is a consolidation happening along the line of resistance. So this is some kind of a pennant forming out here, and I am thinking that this consolidation is going to help it to break out on the upside rather than the downside. However, unfortunately, the MACD is tending towards the signal line to cross over to the bearish side, and the momentum is above average. That is one positive I have here, but I don't see the momentum as being in a raising trend. So we'll see what happens with the Caribou next. At this point of time, it's very difficult to make a positive call out there. And then I'm going to look at CRISPR therapeutics. When I look at CRISPR therapeutics, what I see is the indecision doji candle that's out here. I'm going to magnify this for you so that you can see how slim the doji candle is at this point of time. Can you see it on your screen? It's almost invisible. There's a very thin line out here, which is the body of the candle. It's a very thin slot, and CRISPR has dropped 1.279, and it's hanging just below this line of support, which now becomes a line of resistance at 70.68. Just going to mark it red, and you can see that we are exactly on the line of resistance. So there is a huge indecision. In Japanese candlestick patterns, if you have a green candle which engulfs a red candle, it's a bearish sign, but it's not engulfing because the wicks have gone beyond it. And there's a whole lot of indecision out here. And I think the indecision is because people are still digesting the slick disposal of CTX 110 and 130 from the pipeline. I also think markets are looking at the CRISPR IP situation. They are looking at December 8 PDUFA. And friends, when I talk about the CRISPR IP situation, I came across an article from MIT. Of course, MIT is part of the Broad Institute Consortium, which owns the CRISPR IP in US, which CVC is contesting. So I'm going to talk about that in a separate video. I'll make a separate video on that. But people are starting to think about the IP issue, and they are thinking that there could be litigation. I'm also thinking that they are looking at the December 8 PDUFA and saying, you know what, we still are going to get the Exacel approval. Do I want to jump ship right now? There might be some more money in it. And I'm thinking that way too. I'm thinking that we are likely to hit 80 by Monday. So some are booking profits or selling calls. I think I still think $80 is possible by Friday and or Monday. And we have bull flag waiting for a breakout after consolidation. See, if you look at this, this is the bull flag waiting for a breakout. And breakout it will get, in my opinion, because the RSI has cooled off. The MACD has turned towards the turned across the signal line to become bearish, and that can change in a dime because we have momentum in our favor. So I'm hoping for the best tomorrow for CRISPR. Next, I want to look at Bluebird Bio. And when it comes to Bluebird Bio, I'm not worried in the drop in Bluebird Bio. It is speculators taking profit, in my opinion, because the share price is so inexpensive. 2 days of spectacular gains. If you look at the candle sizes, there are spectacular gains and a little bit of a gap up as well. So I think people are just taking a little bit of profits. And I think I'm going to hold on for, I think, at least 5.5 to $6 for Bluebird, which I believe will happen before the end of the month, by the time it gets its approval for lower sell. And it will also get the uh, priority review voucher, which it can sell. So that's the way I'm looking at it out there. And after this, I would like to go to Illumina because we are seeing something interesting happening out here. So Illumina, as I mentioned, was consolidating and it has broken out of the long-term bear channel. It had 2 really good days of gains. And today it's got a small red candle within the body of yesterday's price range. So Illumina is struggling. It has got a drop of 2.36% today. However, its MACD is still bullish and momentum is still above average. So I'm thinking that it's going to consolidate a little bit and move upward again. I don't see too much of negatives for Illumina at this point of time, um, given the fact that they're going to dispose of Grail. I think things should start improving anytime now. The worst case scenario I'm thinking is that we'll go into a superior bear channel bounded by this diagonal line of resistance, which currently acts as a diagonal line of support in case the price starts to come down. This will be the support. It will be in a superior bear channel then. That's how I see Illumina. And the next share that I want to talk about is ARKG. And ARKG is consolidating a little bit. You may think that this is an evening star pattern, but I don't think this is an evening star pattern because there was no gap up out here from the first candle to the second candle, and there was no gap down to the second candle to the third candle. So there were no gap downs as such. And we also have support out here at 28.02. And our MACD is still bullish, even though moving towards the signal line to cross over to the bearish. But we still have above average momentum. So I'm going to wait and watch ARKG for a couple of days before I change my mind on that. Next, I want to talk about Beam Therapeutics, which is dropped 4.36% today. But friends, it is still in a bullish pennant in my opinion. And the bullish pennant has to break out on the upper side. MACD is still bullish, though tending towards the signal line to cross over to the bearish side. Momentum is still above average, and that's the reason why I still think that it has a possibility to break out above the bullish pennant and resume its move upwards. And then we have the next share to talk about is Verve. So in case of Verve, I think it's the underwritten public offering that they made of around 14.4 million common shares at $10 a piece for a gross proceeds of roughly 143.8 million last Friday. That has kept them range bound out here. This also includes 23 million worth of shares, which accounts around 2.3 million shares, which they gave to Eli Lilly, and 1.9 million shares issued upon exercise of over-allotment option by the underwriters. So overall, I think all those factors are keeping the price a bit depressed, but I think we are consolidating with the aim of breaking out on the upside. Right now, momentum is below average, so the chart looks weak. MACD is also bearish. So it's looking a bit weak right now, but I think the 8th December PDUFA is going to have an impact on all these stocks. There's a bit of rotation taking place. People came into genomics briefly, and then they went out, and they came in from, I believe, this particular area, FAANGs and technology, and now they have gone back into FAANGs and technology. Now, how do I make that kind of a call? So I'm going to show you the heat map from S&P 500, and as you can see here, this is a one-day heat map, and you can see technology is looking slightly bright, and consumer discretionary has got a little bit of green, so everything else is red. But if you look at the 5-day trend, let it load up. Once you see the 5-day trend, you will realize that it has not been all technology, because earlier everything else was green and technology was mostly red. And now, if you look at the 1-day, you can see that part of the technology which was red before has now become green, and everything else that was green before has become red. So it's a sectoral rotation that's taking place, in my opinion. And the losing sector today are financials, industrials, real estate, materials, utilities, energy, consumer staples. Those are the ones which have lost big time. And even among technology, I think there are a limited number of shares which are actually green. The others are all red. So that's how I am thinking the market is responding at this point of time. And friends, if you had to ask me my state of mind, I think there's just a bit of rotation taking place. I'm feeling more comfortable that QQQ is on its way down at this point of time, and I'm happy with the decisions that I had already taken. FNGU is still below the price at which I had sold. Anything can change in the market. We have to take our informed decisions. My risk capability and my appetite for profit tapped out at a particular level last Friday, and I decided to pull the trigger. And I told you all about it. So if my decision was wrong, all of you are going to get to know. And friends, one should not be afraid to take the decision to take profits, because a bird in hand is worth two on the bush. So the greed for more is what causes problem. And as you can see in the greed index, we are already on greed. And if you go to excessive greed, that's going to be crazy situation. The VIX will go volatile crazy, and then we'll be back into fear. So I want to moderate my expectations. So that's what I did. And I would like to hear from you guys. What is the status of your portfolio? Is it looking green? Don't worry too much about the reds that you're seeing in our genomic portfolio at this point of time. I believe that we have weathered the worst of the storm and we are now looking at the light at the end of the tunnel. And the December approval of Exaccell and Dovacell is going to give a little bit of boost to the sector. And hopefully in 2024, we start having interest rate cuts and things will start getting better for the genomic sector. So that's all for today, my friends. I'll catch up with you in the next video. Bye for now.